Many thanks for joining us on Business Incorporated. I am Bisi Adebayo. Coming up today, Kenya and United Kingdom sign trade agreement. Ghana plans to raise $5 billion on international capital markets. Plus, AU says visa openness solutions can boost Africa's economic recovery. But first, the markets. And we're starting off here in Africa, where market sentiment in Nigeria and South Africa were low as the NSE traded in the negative terrain, down 0.92%, while the JSE dropped 0.24%. Kenya closed on Thursday also with a negative index of 0.42%, while the Egyptian markets, which is closed for the week, shed 0.28% on Thursday. And elsewhere, the Middle Eastern markets are closed for the weekend, but ended the week mixed on Thursday. The Qatari index dropped 0.7%, while Saudi Arabia's market was lower by 0.19%. In the UAE, Abu Dhabi's main index advanced 0.63%, while Dubai's index posted gains of 0.28%. And the European markets pulled back today as investors monitor the rollout of coronavirus vaccines and the rapidly approaching deadline for Brexit talks. Let's hear more from Chelsea Delany, who'll be reporting live from the Frankfurt Stock Exchange. Good afternoon, Chelsea. German coronavirus cases surged to a new record of nearly 30,000 today. Of course, German leaders are expected to meet over the weekend to discuss strengthening lockdown measures. But tell us, what's the mood like in Frankfurt?
Well, the mood here in markets in Frankfurt is getting increasingly grim. It now looks all but unavoidable that we will see a hard lockdown coming into place quite soon. Before, we'd heard a lot of calls for a shutdown of stores and retail, potentially starting on December 26th. We've actually heard a lot of ministers, a lot of state politicians now calling for an immediate hard lockdown because the number of infections is rising so fast that we really need to take immediate action, they say, or else risk a much stronger wave that really becomes uncontrollable. So state premiers and Chancellor Angela Merkel are expected to meet on Sunday. It does appear now that there is a lot of support for strengthening measures, and we've already seen a number of federal states come forward with their own plans to start shutting down businesses as early as this weekend. This is obviously going to pose a major economic problem for Germany, which has just been scraping by in this fourth quarter. The shutdown of retail would be a big blow for a lot of stores that had been counting on a big Christmas boom. And this is really starting to weigh on markets here. The DAX in Frankfurt has fallen about 2% today.
Well, it's looking like it may just not be a bright Christmas there in Germany. But then the European Central Bank and the EU leaders both agreed on new stimulus on Thursday to help support the economy. But what are traders saying about the stimulus plans?
Well, these new stimulus measures are obviously coming at just the right time, as here in Germany we're looking at another lockdown, as many other European countries are battling an increasing number of infections and stricter lockdowns. So there obviously is a need for more stimulus, both from the central bank as well as from governments as well. The ECB yesterday announced that it was going to be adding about 500 billion euros to its bond buying program that's been keeping interest rates low for banks, for businesses, and for governments throughout Europe. They've also extended the timeline for a lot of their programs until the middle of 2022, and in some cases until the end of 2023. At the same time, we have EU leaders finally reaching a breakthrough on the 750 billion euro recovery fund that's been hung up in negotiations for months now. That will get money directly, in some cases as grants, in some cases as loans, to these governments that are struggling right now to spend enough to offset coronavirus impacts. But I think, as you can see on markets, it's not really doing much to boost the moods here. A lot of economists now say that we may need more support as these lockdown measures get increasingly strict.
Now, this weekend is also expected to be crucial for Brexit negotiations, as both sides have set Sunday as the deadline for striking a deal. Of course, from the European perspective now, what are the chances of an agreement being reached? Do you see any possibility of that?
Well, the comments we've heard from EU officials in Brussels over the past couple of days have been very dour. Ursula von der Leyen, the head of the EU Commission, today reportedly saying that the odds of a breakthrough are much lower than the odds of failure. So it's seemingly saying that everyone needs to be really prepared, that we may have reached the end of the line after these 4.5 years of talks. So we're not getting much of a signal from politicians in Brussels that they're hopeful at all that we might see a deal. A little bit different on the markets and from markets and investors, though. Lots of investors still believe that we will see some sort of agreement either by the end of this week or by the end of the year when this transition period is expected to expire. So we have seen markets under a little bit of pressure, but not these huge panics in markets yet. And I think investors still hope that the economic consequences, the potential economic fallout from a no-deal Brexit will really drive these both sides to reach an agreement before the transition period comes, because of course that would be very disruptive for a range of businesses, not just in the UK, but here in the EU as well. All
right, Chelsea, thank you. And all I'll have to say to you is please stay safe and enjoy your weekend. We're still talking Brexit, and let's get to hear how it's going down in the UK, where, of course, the conversations continue to dominate the discussion. So let's get the latest from Juliana Olayinka, who joins us from our studio in London. Good afternoon, Juliana. Let's take it up from where Chelsea left off. Now, of course, the European Commission President Ursula von der Leyen is re-echoing Prime Minister Boris Johnson's statement about a possible no-deal Brexit. Of course, she did tell EU leaders that this is likely going to be the outcome. I know you spoke to Chimi about this earlier as well, but what sound bites are you getting at this time?
Pretty much the same. It's really difficult, pretty tense. It's definitely dominating British media today, and it will do all over the weekend. Yesterday, I think, was the first glimpse we had of a stark warning from Prime Minister Boris Johnson telling not only senior cabinet ministers, but also the British public that they must prepare for a no-deal exit, even if we do try and scramble and get a deal together over the next couple of days. Things are going to fundamentally change here in Britain and the way we relate to our European neighbours come December the 31st. Ursula von der Leyen has just spoken to the press. Contingency plans are already in place for the EU bloc in case of a no-deal Brexit. As you said, she reiterated the words that we heard from Prime Minister Boris Johnson yesterday, saying basically that it's looking increasingly likely that there will be no deal. So Britain will fall out in some sort of Australian-style deal, which basically means no deal will fall into the World Trade Organization category. And there are major concerns. You know, this has been 4.5 years. If you're not in Britain, you've only heard of the term Brexit, but people in this country have been living through it. Not only have they been living through that, of course, COVID has completely grappled and ruined the economy. The Office for Budget Responsibility does predict that if we do come crashing out, not only are we going to be 10% less in terms of economically viable than we were pre-pandemic, we're also going to be losing 2% of our GDP. That doesn't even include all of the issues we're going to be having with visas, in doing businesses. Already there are a lot of people putting images out on Twitter showing queues for miles long at Dover. So yeah, this is a major concern. Sunday is the D-Day, so we are expecting something. A lot of people are perhaps suggesting this could just be brinkmanship, that Boris Johnson and the Brits are really pushing the EU to the final stand, you know, putting a bit of a poker face on. And so perhaps there could be a deal. Who knows? Boris Johnson did say yesterday that he's willing to go to Paris, he's willing to go to Berlin and Brussels again to try and work it out, but the odds are against us.
Maybe we should just wait for a miracle, Juliana. Well, away from Brexit now, the Bank of England is saying that UK banks are well prepared for serious economic shocks and can continue to lend during the pandemic. What more is the BOE talking about in its latest financial stability report?
Well, this is an interesting story and will definitely be welcomed by bank shareholders. Since the beginning of the year, banks' profitabilities have really declined. Not only have they put aside billions for impairment charges, because, of course, the British government have been giving out billions of pounds worth of COVID-19 recovery funds. And the banks have had to put aside a lot of this money for bad debt because they know they're not going to get it paid back. There's also been the historically low interest rates at 0.1%. Then 8 months ago, the Bank of England Governor Andrew Bailey did ask banks to put a halt on paying out dividends for 2019 and 2020. I believe that's to the tune of about £8 billion, as well as not giving chief execs any bonuses. But after having a series of risks assessments, the Bank of England have now deemed that it's fine. There will be a cap on how much dividends are paid out, but there is a sense of relief for shareholders that they can finally get some of their money that they've been investing in over the past couple of years.
So are we seeing a reflection of all of these news on the equities and the currencies markets?
Of course we are. I know Chelsea said it's a little bit calm over in Europe. Certainly not here. No Brexit deal is spooking investors. The last time I checked, the FTSE All Share was down 0.45%. The FTSE 100 also down by that same amount. The FTSE 250, the domestic market, is down by 0.41%. In currencies, British pound down on the US dollar by 0.59%, down on the euro by 0.51%, and down on the Japanese yen by 0.76% at intraday, Bissy.
All right, Juliana, thank you for this update. Sunday is just a few days away, so we'll see what directions the conversations go. And in Asia, the markets traded mixed on Friday, and that came as investors kept an eye on negotiations over additional fiscal stimulus in the U.S. South Korea's Kospi index rose 0.86%, while in Japan, the Nikkei 225 declined 0.39%, and the Topix index was up 0.3%. In Australia, the benchmark ASX 200 fell 0.6%, and the Hong Kong's Hang Seng index advanced 0.4% in the afternoon trade. China's mainland shares also declined, and the Shanghai Composite was down 0.77%, while the Shenzhen Composite lost 1.31%. We'll take a look at Ghana's economy when we return in just a moment. You stay with us. Welcome back. Ghana plans to raise up to $5 billion in 2021 on the international capital markets to support budget expenditures, buy back outstanding Eurobonds, and allow the government to refinance domestic debt. According to the Finance Ministry, the funds will be raised through Eurobonds, diaspora bonds, sustainable bonds, and syndicated term loans. Ghana issued $3 billion in Eurobonds in 2020, but high government spending has pushed its debt-to-GDP ratio past 70% and prompted warnings from the International Monetary Fund. Meanwhile, on Wednesday, President Nana Akufo-Addo was declared the winner of a close election. He campaigned on promises to implement a $17 billion program to boost growth in one of West Africa's largest economy. But let's talk more about President Akufo-Addo's economic agenda for his second term in office. And I'm being joined by the election coalition team lead, Mr. Maximilian Huateng, who joins us from Ghana. Good afternoon, and thank you for joining us on the program. Now, President Akufo-Addo hinged his campaign message on change to create jobs, industrialize the economy, roll out free secondary education, and modernize agriculture. But with the COVID-19 pandemic taking its toll on the economy, how feasible are all of these plans? All right, we'll seem to having issues connected with Mr. Huateng, but let's just move on now, hoping that we'll get that sorted out in just a moment. Kenya and the United Kingdom on Tuesday have formally signed a trade agreement in London, which will enable Kenyan exporters to continue accessing the UK market under a duty-free, quota-free arrangement. The deal specifically touches on fresh vegetables, coffee, tea, and cut flowers, although it could be expanded in the future to include textile, livestock, and fish, according to Nairobi. The UK market accounts for 43% of total exports of vegetables from Kenya, as well as at least 9% of cut flowers. Both sides were eager to agree a deal before Britain formally exits the European Union on December the 31st. A record 54% of the African continent has become accessible for visitors who no longer need visas to travel or get one on arrival. And that's according to the 2020 Africa Visa Openness Index published by the African Union Commission and the African Development Bank. The report shows that 20 countries moved upwards on the rank index, while 50 countries improved or maintained their scores, while a significant rise was seen in e-visas offered by 24 countries in Africa. It states that the index reinforces the need to prioritize visa openness solutions in large and small economies while facilitating the free movement of people, goods, and services across the continent. Basic oil prices now, they're up around 1% in early trade today as coronavirus vaccination rollouts kept hopes alive that the demand for crude will build up next year. Brent was up 0.9% at $50.70 a barrel, while U.S. oil was up 1% as well at $47.28 a barrel. Now, that leaves prices set for a sixth consecutive week of gains as promising vaccine trials helped quell gloom over record cases and the number of new infections and deaths around the world in the coronavirus pandemic. All right, let's get back to our conversation now with the Election Coalition team lead, Mr. Maximilian Kwateng, talking about the economic agenda of President Nana Akufo-Addo as he has been re-elected for a second term in office. Right, Mr. Kwateng, thank you for joining us on the program. Now, I was asking earlier, the president hinged his campaign message on a change to create jobs, to industrialize the economy, to roll out free secondary education and touch on the agricultural sector. But with all that has happened with the COVID-19 pandemic, how feasible are all of these plans now?
Yeah, very good. And my fellow Nigerians. I hope the network is better now. If you can hear me, please.
We can hear you. Please go ahead. We can hear you, Mr. Kwateng.
If you can hear me, very well. So I think the impact on the Ghanaian economy, President-elect, President Nana Akufo-Addo. And I think his first-term policy has really resounded with the citizenry and impact as we're reflecting in the elections. But to answer your question, the impact on the Ghanaian economy has been very enormous, just like we have in
Well, it's not looking like a good day to have this conversation with Mr. Kwateng, but let's just move ahead now. Of course, talking about oil prices, we saw gold edge higher today, and that came as the dollar hovered near a 2.5-year low, helping to offset concerns over delays in the U.S. pandemic rescue package. Spot gold rose 0.1% to $1,836.27 an ounce, while U.S. gold futures gained 0.2% to $1,840.30 Elsewhere, silver fell 0.1% to $23.92 an ounce. Palladium was up 0.1% at 333,024 cents, and platinum was also down 0.1% at $1,025.99 and was set to decline 2.7% this week. Now, as the takeoff of the African Continental Free Trade Agreement sets to take off, truck drivers in Kenya say it now takes up to 5 days lining up at the Busia border crossing into Uganda for clearance to move cargo of diesel, and that's up from about 5 hours before the COVID-19 pandemic struck. For many, the situation shows the challenges for Pan-African Free Trade Zone set to start in January 2021.
The queue of lorries snakes down the narrow tarmac road, stretching back as far as the eye can see on both sides of a sign that reads, "Welcome to Busia, the gateway to East and Central Africa." Before COVID-19, Kenyan driver Joseph Kimani used to reckon with a 5-hour wait to cross into Uganda with his cargo of diesel. Now the queue on the Kenyan side, which he and other drivers say extends for upwards of 60 kilometers, takes 5 days to clear, and for them, life on the road has become literally that.
But since I came here, today is the third day here. We have been here on this queue now. And the queue moves at night a bit, but during the day it stops completely, it stalls. The vehicles are like this. And where we are here, as you can see, there is no sanitary equipment. There is no water. We don't have any toilets here. We are not provided with any sanitizers or anything, and nobody cares.
To cross over, drivers need to show a negative COVID-19 test taken in the previous 14 days. Failing that, they must submit to testing at the border and wait 2 days for the result. Busia is part of a transport corridor that extends from Kenya's port of Mombasa into landlocked nations in East and Central Africa, including Rwanda, South Sudan, and Democratic Republic of Congo. Those 4 countries and 50 others are due to launch the AfCFTA Pan-African Free Trade Zone in January. On top of the inconvenience of the long delays, Busia lacks sanitary facilities, and drivers say their allowances do not cover the time spent waiting in traffic queues.
You are hanging less money because if they give you, let me say that's just like $400 to go to Mombasa, and you stay here for so long, you spend a lot of money for eating, even drinking, something like that.
Kenyan Finance Minister Yuko Yatani said snarl-ups would be fewer once the approach road to Busia was turned into a dual carriageway, a project due for completion by 2022.
And that's where we wrap up today's program. Thank you for watching. I am Bisi Adebayo.